I think the corporate or the SME space is a segment where we see traction. First of all, of course, the corporate APIs that Amit was talking about, but also for SMEs. The examples that we heard by now are more focusing on the retail customer, so where we have credit scoring, having a seamless, instant application process for loans, where, for example, data that is retrieved from open banking are where you can use it to pre-fill the form. You can do credit scoring instantly and help the customer to apply quickly and get a quick response. What we also see is indeed to combine that with digital onboarding applications. So eKYC, video KYC applications integrated to that, so that a customer can apply for a loan, for example. A customer that is a future customer prospect could onboard very quickly using open banking data. I think that's one of the main areas that we see, and obviously personal finance managers using artificial intelligence, pattern recognition, spending patterns, recommendation engines. So all of these applications that are on the market can be used to make the most out of open banking, right? So the applications are not really new, but the possibilities are new because you get a 360-degree view of the customer, you have access to the data through standardized APIs, and you can help them. So from Mastercard perspective, we are helping our clients here to come up with such solutions, applications, to make the most out of open banking. So PFMs for SMEs, business finance managers with liquidity cash forecasting applications, bookkeeping, connectivity to make the lives of SMEs much easier. I think there's a lot of traction that we see. Yeah, so I would say from my point of view, we see the development of regulators becoming innovators. Yeah, they intervene much more than before in this space of regulating to a direction of allowing more competition. Regulation is, of course, the driver at the end of the day, because that's reality, if you want or not. If you look into the market, regulation triggered the whole topic around open banking, where open banking was not called open banking. When you look into Germany, where open APIs were a normal thing for many, many years, but nobody talked about FinTechs or didn't talk about openness. But now, since we have the open banking term and the regulation in the UK with PSD2 in Europe, other regions have looked into it as well. I think for the MEA region, taking out the Gulf countries, there's some work going on in Bahrain, for example, which was a kind of first wave of regulation that was implemented for banks to open up last year. So all the banks have to open up technical standards like APIs with a technical standard without any governance around it. The reality was then that, or let's say the purpose of that regulation was to attract FinTechs. It was not to push for competition. It was more really to attract FinTechs, to make the country to attractive place for investors. And the traction was not really there because standards alone doesn't really help. There is much more required around it. And currently the government, the Central Bank of Bahrain, is working on a second revised version of the open banking regulation, which will be an open banking framework that includes aspects from UK, aspects from PSD2, and aspects from Brazil or from Hong Kong. So they are also now learned that there is much more required than just a standard or just an API, which is a good learning. So we will see some more work in the next couple of weeks. UAE, for example, the Abu Dhabi Global Markets, the regulator, is also planning with some kind of a regulation. I'm expecting a soft regulation, a more collaborative approach with the banks to come up with, whereas Bahrain is really prescriptive. Other countries like Saudi Arabia or Oman and others, I mean, we have seen some sandboxes in Oman or in Kuwait, but not that much happening right now. But Bahrain is a trendsetter in a way to where other countries are looking at. Nigeria, I think Nigeria is absolutely the country in sub-Saharan Africa, South Africa, the country with open banking without regulation. I think there's a lot going on. And South Africa is let's say, a bank consortium that is working on some kind of standards and a collaborative approach in the market, which is a purely market-driven approach. But as you can see, a lot is happening, but we see similar patterns in the MEA region as in other regions as well. I mean, when you look back the last 3 years, when we talked about PSD2 and what it will all change, I think we are three years later. Things have changed, but I think we are still at the very, very, very beginning of open banking or open finance. I think in the next few years, we will see a next wave of regulations in different countries. I think that will come for sure. And I think these regulations will be mostly focusing on open finance, where, you know, certain application where more competition is coming in, sharing product information so that better comparison sites can evolve, customers can pick and choose different services, and then switch accounts, switch loans, switch mortgages, and open banking can help to do that. In the current open banking setup, it's not possible, but I think we see the first developments in the UK with open finance and in other jurisdictions. Brazil is already in the path of open finance. We don't name it as such. I think this is a clear development for the next few years. Another one is probably, we talked about PASP and frictionless, you know, instant, invisible, and free. Yeah, but I think we will see first tangible applications or payment methods coming up that might be much more frictionless than we could expect, because we heard all the challenges, right, of SCA and the frictions. But I think that the regulators are also learning, especially in Europe, listening to the ecosystem that, you know, things can change. Countries like Pakistan, for example, that is not very obviously on the radar, is one of the countries that are also pushing for open banking, especially for financial inclusion. Financial inclusion here also means not only the unbanked, but also the underserved customers. For those customers who have a bank account but don't have access to loans because they don't have a proper address or probably not enough information. And FinTechs can help to innovate there, right, in collaboration with banks. I think there will also much more coming up in the next few years. I would say customer experience, business models, and a proper infrastructure. I think it's all key, right? All this triangle.